Hey everyone, I'm David Finz, and on this episode of the Cyber Insurance Imperative, we're turning our focus to cybercrime. They say that crime doesn't pay, but unfortunately, certain types of cyber attacks, such as business email compromise and funds transfer fraud, continue to plague businesses. And as noted in the newly released Cyber Claims Report from Coalition, a leading managing general agent, this particular attack vector is surging despite better security controls on the part of some businesses. The report from Coalition notes that even while the severity of ransomware dropped significantly in the second half of last year, BEC and FTF incidents persisted. These types of attacks may not grab the headlines and tend not to be 7 or 8-figure losses, but for cyber insurance underwriters, they can prove to be a sort of death by 1,000 cuts. So what's fueling this rise? Well, as reported in Risk and Insurance magazine, the email inbox is an attractive target for attackers looking to obtain payment information and even interrupt payment processes. The availability of AI-generated content is also making it easy for bad actors to craft phishing emails. One bright spot in all of this is that with the right support, all hope is not lost for businesses seeking to recover their funds. Coalition notes in that same article that it helped claw back over $38 million in fraudulent transfers for its policyholders last year, and more than half of all reported matters were handled without any out-of-pocket costs to the insured. This once again illustrates the value of cyber insurance as a way of helping companies manage the financial impact of cyber risk. But you don't want to have to deal with the cybercrime in the first place, and Coalition stresses the importance of implementing good cyber hygiene. For example, Coalition Incident Response reports that if your remote desktop protocol is directly exposed to the internet, your business is 2.5 times more likely to experience a claim. In last week's episode, I talked about how the stabilizing market for cyber insurance offers companies an opportunity to obtain better pricing and coverage terms, but in truth, that's going to depend upon whether you take the right steps to differentiate your organization as a better risk. And that is where the Alliant Cyber Insurability Risk Assessment, or CIRA, can help. We sit down with our client's InfoSec team several months before their renewal and have a conversation with them about their cyber maturity. We then use this information to identify action items that need to be remediated, and then put you in touch with qualified service providers who can help you get those controls in place. And if a simple yes or no answer doesn't do justice to your cybersecurity regimen, we'll help explain your approach to the underwriters. The best part of CIRA is that it can actually serve as your renewal application, relieving you of having to resubmit that information. And the following year, you can just refresh the assessment. The result is a streamlined process that flags trouble spots before we go to the underwriters and helps you present your company's risk profile in the best possible light. This helps ensure better pricing and coverage terms with a minimum of conditions or subjectivities that need to be satisfied before you can bind coverage. Now that the market for cyber insurance is improving, if your cyber maturity is good, you should be able to take advantage of that. Our CIRA risk assessment can help you get there. Want to learn more? Please don't hesitate to reach out. You can DM me on LinkedIn or email me at david.finz@alliant.com, and I'll put you in touch with a member of our cyber risk consulting team. And if your current broker isn't having these conversations with you, maybe it's time that you discover the more rewarding way to manage risk. Thanks for watching.